Hello everyone, welcome to D Street School. Today we are going to discuss about a very interesting option strategy called bear put spread by using the stock option called AMBUJA Cement. I'm sure you will be surprised about the risk and reward ratio in this strategy because there will be a more than 95% of chances you can go and book the profit around 40 to 50,000 within the next few trading session. So don't be surprised before we go and discuss how that would happen. What are the possibilities are there? We will go and look at in multiple aspects. Before that, if you're just new to this channel, I would ask you to please connect with me by subscribing this channel because there will be a more valuable videos yet to come. So I do not want you to miss that videos. So please do subscribe this channel, and after watching this video, if you like it, don't forget to click the thumbs up button and please do share this video so that others will get benefited. My name is Shiva Gurunathan. I'm going to with you for next 15 minutes. Let's begin the session. Before we go and discuss anything in detail, I will give you the overview about the video so that you will have a better understanding on it. First, let me begin with the volatility analysis. So when I say the word volatility, so it means a statistical concept. I'm sure you might have heard word when you are in a high school like a standard deviation, variance, mean, median, like that. So don't be panicked. We are not going to discuss any mathematical or statistical concepts here. All we do, we will go and find the AMBUJA cement at what extent it will trade for next few trading sessions. We'll go and find that. And but I would ask you to have some basic idea about the volatility and the thought process about the volatility. I made a separate video about the volatility analysis. So what is the volatility analysis? What is the thought process behind that? How we can go and place a stop loss order by using the volatility. So I would request you to watch that video, and I have given the link in the description as well as in the iCard icon. So please do watch the video so that you will have a better understanding about the volatility so that you will not have any hassle while watching my videos. So after we done with the volatility analysis, let next we begin with the technical analysis. When I say the technical analysis, of course, we will begin with the chart analysis, candlestick chart analysis. Usually, we will go and predict the market direction by using the candlestick chart and other supporting indicators, whether market would be a bullish or bearish or flat market, how that would be for the next few trading session. So once we concluded the market direction, we will go and implement our strategy. So what kind of strategy I used here? As I said before, I used put call spread strategy. So what is a put call spread strategy? So what is the thought process behind that? We will go and see that. And finally, we will go and conclude this video by discussing risk and reward analysis. Like when I say the risk and reward is how much we are going to risk in our capital and what are the reward we are expecting. That, as I said initially at the video, there will be a lot of opportunity to, as I said before, you'll be surprised about the risk and reward. So there will be a lot of chance you can go and book the profit around 50,000 within next trading session. Just please be patient. So we will go and reveal all the secret within a few minutes. Let's begin with volatility analysis. AMBUJA cement last close would be 391 rupees 80 paise. The average price movement of the AMBUJA cement is 7 rupees 40 paise in a day. So this is the last 1 year data. I just took and calculated, find the average price movement for the AMBUJA cement. This is a historical volatility level I have given here. As I said before, you must have some basic knowledge about the volatility level. So how you can go and understand the this data and what is the volatility, what is the thought process behind that. For that, as I said before, I made a separate video for that. I would request you to go and watch this video so that you will not find any difficulties while continuing my videos. So I do not want to leave you at dark. I will give you the basic introduction about the volatility, how you can go and interpret this data. So that will give you small enlighten. So these are the levels I have given here. You can find the name R1, R2, S1, and S2. This is not a typical support and resistance. In order to understand easily, I named it as the R1 and R2, S1, S2. Actually, this is the standard deviation 1 and standard deviation 2. So let me tell you, for example, R1 and S1 is the standard deviation 1. R2, S2 is the standard deviation 2. So as I said before, we are not going to discuss any mathematical concept, but I will tell you how you can go and understand this data. So these are the levels. You can see the 68% I have mentioned here, which means I can tell you confidently 68% Ambuja cement will trade within this range, which means from 380 to 410. So we can expect 68% Ambuja cement will trade within this range, but there will be a chance as remaining 32% Ambuja cement might trade outside of this ranges, either upside or downside. So in case if you do not want to take chances, you can go and opt for standard deviation 2, which is R2 and S2. When you go and opt the standard deviation 2, I can tell you 95% Ambuja cement will trade within this range from 366 to 426. So the remaining very few chances Ambuja cement might trade outside of the range, either upside or downside. But I would recommend you to initially you stick with the standard deviation 1, because the average price movement of the Ambuja cement is 7 rupees 40 paise. When you go and see the standard deviation 1 range, which start from 380 to 410, and current close would be 331. So when price come to 380 level, there will be a chances Ambuja cement might bounce back and continue the direction. So we cannot come to the conclusion with this data alone. We have to go and check other possibilities, like we have to do the technical analysis. So this is what I want to tell you about the volatility analysis. This is how we can go and understand this data. So these are the levels. Okay, so and this is a PCR ratio, I mean put call ratio, which is overbought 0.27. Always it means overbought level, so that we can expect some correction on upcoming days. So we'll go and investigate further in technical charts. What are the possibilities for correction? Before that, I would ask you to see these numbers. This is buyers and sellers and strength. So it literally it shows a 410 level, which means call option sellers are more at this 410 level, which means they are expecting price will not move further 410. So it's same as you see the 380 level, which shows a 243 seller, which means put option sellers expect market will stay at 380 level. But when you see volume wise, there will be a more call option seller than put option seller. So we can confidently say price will not move 400 and above 410 level, but we cannot say as much as confident as we said like call option seller. This is a support area for the put option seller, but there will be chances that might broke down since we don't have enough volume here. So in order to understand easily, this is act like a resistance, this act like a support. Okay, so this is what a statistical analysis about Ambuja cement. We'll go and analyze we'll go and do the technical analysis. So what you are seeing is the Ambuja cement daily chart. So you can see in the previous trading session there will be a long red candle, which indicates there will be a lot of seller at this level. As I said before, 410 there will be a strong resistance. We can also see in candlestick chart, and we would also discuss in the statistical analysis by using the option chain concept. So the 410 will be a strong resistance. So after that we will have another resistance at 425 level. So the support what we have seen before is 480 level. So we can expect the support, and moreover there is a 50 days moving average is coming up. So we can expect the support range would be 375 to 380 level. So this is minimum we can expect Ambuja Cement will come to that level in few trading session. So if you see the current price would be the 391.80, which is lesser than the moving average of 23 days moving average and 4 days moving average, and quietly above the 50 days moving average. So let us wait and see how far the Ambuja Cement will trade, because we do have a support at 50 days moving average. So that's the reason I have customized the target around like 480 levels. So 475 to 480 levels. As we did all the analysis, we know there will be a lot of chances Ambuja Cement will come to the level around like 375. So what kind of option strategy we can opt for, and how we will benefit about that strategy, we'll go and discuss in detail. Here we are using bear put spread strategy. So what is bear put spread strategy? What is the thought process behind that? Simple. When we have a moderate bearish on stock or index, we can go and opt for bear put spread strategy. So what is the thought process behind that? When we go and implement this strategy, when market works as our favor, which means it achieved our target, our profit will be limited. So as we discussed in the technical analysis, we are expecting Ambuja Cement will come down to 375 to 380 level. So 300 at 375 levels, we'll be booking some profit. Even though if market comes to 350 level, 300 level, our profit remains same. As same as our loss also be fixed. We will not incur more losses. So our loss also will be fixed. So in overall in the strategy, we must have a moderate bearish about the stock or index, and our profit will be limited, and our loss also will be limited. This is a two-leg option strategy. The first leg we will be initiating in the long put, theoretically that will be in the money. The second leg we will be initiating at short put, theoretically that will be in out of the money. But I made some changes by selecting the strike prices, because I'm expecting Ambuja Cement will achieve the target in few trading session. So we will go and discuss what is the profit we will go and book that, or what is the maximum loss we can incur. As I said before, that will be a very interesting part about to come. We'll go and reveal the secret now. So Ambuja Cement, as I said before, a expiry would be 26th August. Just we have a 4 trading session, and the expected volatility, I mean historical volatility, would be 3.81%, and already we discussed about those levels a few minutes back. So our PCR ratio would be 0.27, which is an overbought level, so that we can expect market will come down for a while statistically. So as I said before, we will be initiating a two leg. One is a long put, another one is a short put. We'll be initiating a one quantity in both the legs. So for long put, we are choosing 425 strike price, which is deep in the money, by paying 19 rupees 85 paise premium. So our target date would be maximum 4 days. And the second leg of short put, we go for one quantity, and we are opting for the strike price 405 by receiving 17 rupees 14 paise premium. So on first leg we will be paying 19 rupees 85 paise. On second leg we are receiving 17 rupees 14 paise. So the net debit would be 2 rupees 70 paise. This is the net debit. So when I say the net debit, the amount will move out of from our packet. So the maximum quantity here we have is 3000. This is the quantity, minimum quantity. Sorry. So 2 rupees 70 paise net debit into 3,000 units, it come around like 8,100. So this is the maximum loss we can expect by using this strategy. If in case market didn't work our favor, it expired in 420 level, 430 level. So obviously this is the maximum loss we incurred by using this strategy. If in case market achieved our target, I mean stock achieved our target 480 level, so what would be the profit we will make? Simple. 17 rupees 30 paise on premium we book profit. So in overall 51,900 rupees we will be booking profit if Ambuja Cement come down 12 points. Minimum 12 points. If it reaches 380, we will be booking 51,900 rupees, and we discussed what are the opportunities it comes to the level 380 level. So we found 50 days moving average at 375 level, and there will be a strong support at 380 level, and strong resistance at 410 and 425 level. So definitely more than 95% we can expect easily Ambuja Cement will come to the level of 380, so that we have more possibilities, can book profit of 51,900 rupees. We'll see how Ambuja Cement trade on upcoming days. So this is all I want to share with you guys. So if you, I'm sure you will be very happy about the concept which we discussed here. If you have any doubt, please leave your comment at the comment section. If you want to give me any feedback, you can also leave the comment. So as I said before, if you like this video, don't forget to click the thumbs up button. Please stay connect with me by subscribing this channel, because there will be a lot valuable videos yet to come. This is all I want to share with you. I hope you enjoy the session. So we will see on next video.